So here's a question for you. Could a company, one that's never actually sold anything,
Yeah.
and, consistently loses hundreds of millions every single year, could that company actually hold the key to the future of transport? Maybe even become one of the most valuable tech providers out there? Or is it all just, well, a huge gamble? That's the paradox we're diving into today. Welcome to the Deep Dive. Today we're unpacking QuantumScape Corporation, ticker symbol QS. This is a company right at the forefront, really pushing the boundaries of next-gen battery tech. We've gone through a whole stack of sources, financial reports, industry analyses, you name it, to bring you the key nuggets of knowledge. Our mission, to figure out what makes this company tick, what the market really thinks, and what its future might actually hold for you.
Yeah, and this deep dive is particularly interesting because QuantumScape, well, it isn't your typical company, is it? As of our analysis date, that's June 25th, 2025, the stock actually saw a pretty dramatic surge. But just for consistency in our valuation talk, we're using its closing price from June 24th, which was $4.33. The story here isn't about current profits, not at all. It's about enormous potential and, let's be honest, even bigger risks.
Okay, so to really get a handle on QuantumScape's big bet, we need to start right at the core. What exactly are they trying to pull off, and how are they planning to do it? Let's kick things off with Chapter 1, Business Analysis. All right, QuantumScape's mission statement talks about, quote, revolutionizing energy storage to enable a sustainable future. The main focus, speeding up EV electrification. Their big vision is this no-compromise battery. So for you, the EV driver, this means hitting those key issues head-on. Range anxiety.
That's a big one.
Those long charging times, nobody likes those.
Definitely not.
And the safety concerns we sometimes hear about with current batteries. Now, what's really interesting is how their business model has shifted. They're pre-revenue, yes, but they've pivoted from planning to be a direct manufacturer, which is super capital intensive, to more of a capital light licensing approach. And this really crystallized with that landmark deal with Volkswagen's PowerCo back in July 2024.
That was huge news.
Yeah. So PowerCo handles the mass production, all the billions needed for factories, and QuantumScape just collects royalties.
It's a smart move strategically, really de-risks their path to market quite a bit. They avoid that massive factory build-out cost themselves.
Exactly. Now, their main product is the QSE5. That's their solid-state lithium metal battery cell. It's currently in advanced prototype stages. Alpha 2 and B-sample prototypes are already out with partners like VW for testing.
So they're making progress on the prototypes.
They are. And what does this no-compromise battery actually promise? Well, higher energy density.
Yeah.
They're talking 400, 500 miles range.
Wow, that's significant.
Faster charging 10% to 80% in under 15 minutes.
That would be a game changer.
Better safety, too.
Yeah.
Their proprietary solid ceramic separator is non-combustible, so less fire risk.
Crucial point.
Plus, a longer lifespan aiming for over 95% capacity after 1,000 charge cycles. And maybe even lower cost eventually because of this anodeless design. It cuts out the costly graphite.
Right, simplifying the cell structure. So lots of big promises there. And those promises, that vision, it's certainly ambitious. The market for solid-state batteries is definitely looking like it could explode. But what's fascinating is just how much the market size forecasts vary. You see numbers like $963 million by 2030 from Market Sand Markets, then jump way up to $33.38 billion by 2033 from Straits Research.
That's a massive range. What's behind that?
Well, I don't think it's a flaw in the analysis. It really reflects the binary nature of this whole thing. This tech is either going to be a huge industry-changing win or, potentially a total write-off. There's not much middle ground expected.
Makes sense. High risk, high reward.
Exactly. And QuantumScape is definitely a front runner in this race for the, quote, holy grail battery. But the competition, it's intense. You've got major car companies like Toyota, NIO getting involved. The big incumbent battery makers like Panasonic, Samsung SDI, and other well-funded startups like Solid Power, they're all chasing this.
So not an easy field to play in.
Not at all. The barriers to entry are huge. We're talking massive capital needed, maybe up to $1.2 billion.
Yeah.
Deep technical expertise, strong IP. So the key question is, what's QuantumScape's actual edge here?
Right. What makes them stand out?
Well, they definitely have outsized brand recognition, thanks to backers like VW and Bill Gates being an early investor. That helps. And theoretically, there's a cost advantage from that unique anodless lithium metal design. Simpler production, fewer materials. But their real competitive moat seems built on a few key assets. First, that proprietary ceramic separator. That's really the crown jewel.
The core tech.
Yeah. It's flexible, non-combustible, and crucially, it stops those dendrites.
The little metallic growths that can cause shorts.
Exactly. Preventing those lets them use that high-energy lithium metal anode. Second, their IP portfolio. Over 200 patents granted and pending. That's significant protection.
Mm-hmm.
And third, this Cobra manufacturing process they announced just last month, June 2025.
Cobra, what's that about?
It sounds like a potential game changer for actually making these things at scale. It addresses that manufacturing valley of death. It's a new heat treatment for the ceramic separators. Apparently, it's 25 times faster than the old way.
Oh, 25 times.
Yeah, needs a small factory footprint, uses less energy. It's the how they might actually scale this efficiently. It makes that capital-light licensing model really viable for gigawatt-hour scale production.
That is a really compelling picture of the business and the tech edge. But with so much riding on this pretty revolutionary technology, the question naturally becomes, who's steering the ship? Who are the people making the critical decisions? Let's move on to Chapter 2, Management Evaluation. Okay, so a really pivotal moment here was the leadership change back in February 2024. Jagdeep Singh, the co-founder, he moved to chairman. And Dr. Siva Sivaram, a veteran from the semiconductor industry, took over as CEO.
Right. That's a pretty classic move for a deep tech company, isn't it?
It really is. It signals that shift from, pure vision and R&D towards operational execution, getting things built and scaled.
And Dr. Severam's background seems particularly relevant.
Absolutely. Over 30 years experience, scaled complex tech like 3D NAND flash memory at SanDisk.
Which has parallels, right? That precision multi-layer manufacturing.
Exactly. It mirrors the challenge they face with their ceramic battery separators. And importantly, the founders are still involved. Singh as chairman, Tim Holmes still CTO, Professor Fritz Prinz as chief scientific advisor.
So continuity of the vision is there. Yeah, that continuity is important. But while the new leadership signals this shift towards execution, the company has definitely faced communication challenges in the past. You remember those initial projections from the 2020 SAC deal? Commercialization by 2024.
Right, those got pushed back quite a bit, caused some disappointment.
It did. And then there was that critical short seller report from Scorpion Capital in 2021 questioning the tech. So the new leadership, their transparency and consistent communication are going to be absolutely crucial going forward, building back that trust.
Makes sense. How are they handling their money? Capital allocation.
Well, as a pre-revenue company, it's pretty straightforward but demanding. Pretty much all their capital goes straight into R&D. They spent, $525.2 million on operating expenses in 2024 alone.
Wow, that's a serious cash burn.
It's the central financial reality for them right now. And what's fascinating, if you look at metrics like return on invested capital, ROIC, it's deeply negative. We're talking like negative 39% to negative 124%.
Which normally looks terrible.
Normally, yes. But for a company like this, a pre-revenue deep tech firm intentionally pouring money into future innovation, it's not necessarily a red flag signaling destruction. It's really a reflection of that strategic investment. The core question for you, as someone trying to understand this, is whether that investment pays off down the line. Will it generate a high future ROIC?
That's a really critical way to frame it. Those losses aren't waste. They're fuel for the potential future engine.
Fascinating. It really shows how standard financial tools need, a different interpretation for these kinds of companies. Let's dig a bit deeper into the numbers themselves now with Chapter 3, Financial Analysis.
Okay, so looking at the top line, there isn't one yet. Zero revenue over the last 5 years. And analysts, they don't see meaningful revenue kicking in until 2026 at the earliest.
Right. No sales yet.
Which naturally leads to massive net losses. As you said, $477.9 million just for fiscal year 2024. Well, let's talk about financial stability, because this is where the picture really shifts, and it kind of counteracts those big loss numbers.
Yeah, absolutely. If you look at the bigger picture, QuantumScape's balance sheet, it's like a strategic fortress. They've financed almost entirely through equity, very little debt. Their debt-to-equity ratio is tiny, just 0.08.
So not burdened by debt payments.
Exactly. And their current ratio, that measure of short-term liquidity, is exceptionally strong. 16.66.
16 times?
Yeah. It means their cash and marketable securities are over 16 times greater than their short-term liabilities. This gives them a huge liquidity cushion. They've stated they have a cash runway stretching into the second half of 2028.
Okay, so they have breathing room. They can fund the R&D for years.
Right. It allows them to pursue those really ambitious goals from a position of strength, not desperation, which is vital for their long-term plan.
Okay, so strong balance sheet, but no revenue. How on earth do you value a company like this? It feels more like art than science, right?
Yeah.
Projecting a really distant, uncertain future.
It absolutely is. Traditional metrics like PE, completely irrelevant here.
Yeah, no earnings.
Price to book is one of the few you can look at. It's around 2.18. And what that suggests is the market values their intangible assets, the IP, the partnerships, the potential, way more than their physical asset.
Okay, so the market sees value beyond the buildings and equipment.
Right. The main tool people try to use is a discounted cash flow or DCF analysis. But it's hugely speculative because you have to assume successful commercialization.
Which is the big unknown.
Exactly. We looked at an educational model just for illustration, and it suggested a potential intrinsic value somewhere between, say, $5.2 billion and $7.4 billion. But, and this is a huge but, that requires incredibly aggressive assumptions.
Like what?
Like revenue actually starting in 2027 achieving over 80% long-term operating margins from licensing, which is very high.
80%, wow.
And using a really high 25% discount rate to account for that extreme risk.
So highly sensitive assumptions.
Very. If even a couple of those assumptions are off, the valuation plummets. So the takeaway for you isn't a specific number. It's understanding that valuing this company is all about weighing that enormous potential against the immense execution risk.
Right, got it. We've covered the business model, the leadership, the unusual financial situation. Now let's shift gears and talk about how the market itself is actually reacting to all this complexity. Time for Chapter 4. Market sentiment. Okay, no bones about it. QuantumScape is what they call a battleground stock.
Definitely polarizing.
Yeah. Wall Street analysts, mostly skeptical. The consensus rating is basically reduce or hold. And it's notable currently no buy ratings from the big firms.
That's telling.
Their price targets are all over the map too, from $2.50 on the low end up to $8. The average is around $5.19.
Huge range. Reflects the uncertainty.
And the stock price itself is incredibly sensitive to news. It jumps around like crazy. Remember that surge just a couple of days ago, June 24th, 25th? Over 35% jump.
After the Cobra manufacturing news broke.
Exactly. A perfect example of how volatile this thing is. Cinema can turn on a dime based on one announcement.
So, yeah, the critical question is, why is it so volatile? Well, one really clear indicator is the short interest. It's high. 16.65% of the company's float, that's over 66 million shares, are sold short.
16%, that's significant.
It's more than double the average for its peer group. It shows a large number of investors are actively betting against the stock.
Which also makes it prone to short squeezes, right?
Precisely. Good news can force those short sellers to buy back shares quickly, pushing the price up even faster. And technically, before that June 25th surge, the stock was kind of languishing below its 200-day moving average near the 50-day. That Cobra news really propelled it above those key levels, which signals, at least a potential shift in the short-term momentum and how traders are seeing it.
Okay, so a real battleground, lots of volatility, high short interest. Who actually owns this stock then? And what does that tell us? Let's explore Chapter 5, ownership structure.
Right. Looking at who holds the shares is pretty revealing. Institutional investors, the big funds like Vanguard, BlackRock, they hold a significant chunk, somewhere between 25% and 31%.
Okay, so the big players have a position.
They do. But what's really fascinating, I think, is the Volkswagen Group. They're the largest single shareholder, holding 12% to 15% of the company.
And that's more than just money, right?
Oh, absolutely. Their presence is a powerful validation. Why? Because unlike us, or most investors, Volkswagen has done deep, rigorous technical due diligence on QuantumScape's tech, stuff we just can't access.
They've looked under the hood, literally and figuratively.
Exactly. And their large stake means their success is directly tied to QuantumScape's. It suggests a strong belief in the technology and the partnership. Then you got insider ownership. It's also very high, around 29%.
Management has skin in the game.
Lots of it. Now, there has been some net selling by insiders, but looking closely, it seems to be mostly regular pre-scheduled sales, for personal liquidity, not really a red flag suggesting a mass exodus or loss of confidence.
Okay, standard procedure for execs sometimes.
Seems like it. And finally, there's unusually high retail ownership. Individual investors hold about 47% of the shares.
Nearly half. Wow.
Yeah, it's high. And this large active retail base is a key reason for that extreme volatility we talked about. Retail investors often have different time horizons, react differently to news than institutions.
That ownership breakdown really does paint a picture. Big validation from VW, insiders aligned, but also a huge retail presence driving volatility. Okay, but with all this promise, there are obviously massive challenges, huge hurdles. Which brings us to the biggest question. What could actually derail this whole thing? Let's get into Chapter 6, risk assessment. All right, let's try and map out the potential pitfalls and plus points with a kind of SWOT analysis view. What are the core strengths? What gives them a real shot here? Well, clearly it's that technology leadership, the ceramic separator, the anode-less design.
Backed by the IP portfolio.
Right, over 200 patents. The huge Volkswagen partnership is key. And that fortress balance sheet we discussed, that multi-year cash runway, those are big pluses.
Definitely.
But then the weaknesses, they're significant. Still pre-revenue.
Big net losses, high cash burn.
And that massive manufacturing scalability risk, that valley of death you mentioned.
The jump from lab to factory?
Yeah. Plus, a heavy dependence on VW as their key partner.
True.
Looking ahead, the opportunities are obviously vast. That enormous total addressable market for EV batteries.
Billions, potentially trillions eventually.
The capital light licensing model could speed up market entry. Potential to expand into other areas, maybe consumer electronics down the line.
Could be.
And, favorable government policies supporting clean energy provide a tailwind.
Generally helpful, yes.
But finally, the threats.
Yeah.
Also formidable. Intense competition, we covered that.
From giants and startups.
The risk that their tech just gets leapfrogged, technological obsolescence. Potential supply chain problems for critical stuff like lithium.
Always a concern.
And just broader macro factors, inflation, interest rates, trade wars. Those can impact everything.
Yeah, and putting that into context, one specific external threat has definitely emerged recently, those new U.S. tariffs in 2025, especially targeting Chinese goods, with rates potentially over 100%.
Ouch. How does that hit QuantumScape?
Well, it directly impacts battery costs and material costs because China really dominates that global supply chain right now. Now, QuantumScape aims for U.S. and European manufacturing, but their supply chain could still face higher costs or delays for equipment, raw materials sourced internationally, and it could also just slow down overall EV adoption in the U.S. if batteries get more expensive.
So ripples across the industry.
Exactly. But what's interesting here again is how that strategic pivot to licensing with Paraco in Europe looks like a pretty smart response to these geopolitical wins.
How so?
Well, it lets them earn high-margin revenue without physically shipping battery components across oceans subject to tariffs. And it outsources that multi-billion-dollar factory cost to VW, so potentially sidestepping some major trade barriers.
Clever positioning, maybe?
Potentially. But it brings us back to the critical challenge, the number one risk. What's the single biggest hurdle for QuantumScape?
What do you think? Competition.
I'd argue it's not necessarily external competition. Public data, like test results, actually suggests QuantumScape might have a performance lead right now. The far, far greater uncertainty is internal execution.
They're actually making it happen.
Yes. Can they genuinely transition from these, perfect lab prototypes to mass producing millions of flawless battery cells in a giant gigafactory with high yield, meaning not too many defects, and low cost? It's like designing a Formula One car, amazing tech, but then needing to figure out how to build millions of them reliably and affordably on an assembly line. Totally different challenge. That journey through the industrial valley of death is, I think, the absolute primary risk for anyone looking at this company.
That's such a crucial point. It really reframes the risk. It's less about if the science works in the lab and more about can they actually build it at scale. Okay, let's try and bring all these different threads together now in our final section, Chapter 7. Conclusion. So after digging through all of this, what does it all mean for you? Whether you're an investor, maybe just an EV enthusiast, or simply curious about future tech. QuantumScape really is a company of, profound contrasts. It's one of the clearest binary investment cases I've seen.
Yeah, it feels very much like all or nothing.
Exactly. It's either going to be an extraordinary success or, frankly, a complete failure. So the bull case, the optimistic view, rests on that potentially revolutionary product solving EV drawbacks. The top-tier partner validation from Volkswagen, that's huge. The de-risked capital-light licensing model. Their financial endurance, thanks to that strong cash runway and, proven leadership, now with Dr. Sivaram, focused on execution.
Right. But then you flip the coin. The bear case is equally compelling, grounded in reality. They still have totally unproven commercial viability, billions in accumulated losses. There's that huge manufacturing valley of death challenge we just discussed. Can they cross it?
The biggest question mark.
Intense, well-funded competition breathing down their neck. Market expectations are already high, meaning any significant setback could be absolutely catastrophic for the stock. And as we saw, there's significant market skepticism baked in, shown by that high short interest. Now, wrapping up the valuation summary, traditional metrics, pretty much useless here.
Right. Forget PE.
That educational DCF model we talked about, the one that assumes success,
Hmm.
it suggested a potential value of $5.2 billion to $7.4 billion. Compare that to the market cap now, around $2.4 billion, based on that 4.332 price.
So the market cap is much lower than the potential success value.
Exactly. It clearly shows the market is pricing in a very high probability of significant delays, or maybe even outright failure. The risk is heavily discounted. So, bottom line. An investment in QuantumScape today isn't about traditional value investing, not at all. It's fundamentally a venture capital style bet. A bet on a technological revolution, but one that's playing out in the public markets. The potential upside, it's enormous if they pull it off. But the risk of losing a substantial amount, maybe even everything, that's equally real. For you, the observer or potential investor, it really boils down to your confidence in three key things. One, the actual superiority of their core technology. Two, the new management team's ability to execute that incredibly difficult industrialization phase. And three, the strength and long-term commitment of that Volkswagen partnership.
Which leaves us with a really interesting final thought to ponder. Let's imagine, just for a moment, that QuantumScape does successfully navigate that valley of death. They prove mass manufacturability. What other industries, beyond just electric vehicles, could their solid-state technology completely disrupt? How else could it truly change our world? Think about consumer electronics, grid storage. The possibilities are vast. Definitely something to think about. We really hope this deep dive gave you some incredible nuggets of insight into QuantumScape. If you found this valuable, well, you might be interested in more in-depth analyses just like this one. Be sure to like and subscribe to Stock Analytics AI. Members get priority deep dives on tickers they request, and over the next few months, we're actually covering all of the S&P 500 stocks, with members getting exclusive priority access. Or, if you just want a one-off deep dive on a specific company you're interested in, drop us a super thanks.
And just a crucial reminder, please remember, this analysis was generated by an AI system. It's purely for educational purposes. It absolutely should not be considered financial advice. Always, always conduct your own thorough research or consult with a qualified financial advisor before making any investment decisions.